Actually takes me, it's a perfect lead into the Faber Report today because I want to talk a bit about alternative asset managers and the private markets, which we talk about so often because they are so much more robust over these last few years than they ever have been. Interestingly, we heard from both KKR and Apollo. That's not the interesting part. Both stocks are actually down. Nothing clear here in terms of the actual numbers themselves. Assets continue to go up sharply. Total AUM at Apollo at now $751 billion. Our viewers know to the extent we focused on it, obviously they're a giant in private credit. Over $500 billion there in assets. Their insurer Athene, such an important component overall of the company. And then KKR, which hit $1 billion in revenues from capital markets, by the way, the first time they've ever done that. And also their assets under management up 15% year over year to $638 billion. But they're all down. They're all down this morning. Did listen in on the call with Mark Rowan, who's become an important voice in our financial markets, really? Obviously a runner-up for the Treasury, Secretary of the Treasury position. And in general, he's, I think, raised his public profile over these last couple of years to become an important voice. Not to mention, by the way, these companies' market caps. You know, KKR at $150 billion, Apollo at over $100 billion. You know, they're right up there with some of our biggest, with our banks. Apollo now around $91 billion. So they are significant players, obviously. Blackstone, the biggest, more than a $200 billion market value. But we've also been focused in part on BlackRock, the largest asset manager out there, and the moves they've made in the private markets. Remember, whether it's buying HPS Investment Partners, one of the leading private credit platforms, Global Infrastructure Partners, and also that data information company that follows the private markets, Preqin, and putting all of that together. Rowan actually on the call had an interesting insight about what he thinks is coming from BlackRock that I think is worth sharing. He said BlackRock made a number of very significant acquisitions. I just mentioned them. And lay a foundation for an integration of public and private. I continue to believe this convergence of public and private will be a very important source of demand for private assets. And I see private assets in any number of forms. Our industry and our firm will be a supplier of product to traditional asset managers as they seek to make their products more competitive, given the incredible amount of indexation, correlation, quite frankly, just data that exists in the market. And so he goes on to say that traditional asset managers will evolve their business to include products that are public and private. That's BlackRock. That's what they're working on, Jim.
We bought some BlackRock yesterday.
And Fink is without a doubt working on it in terms of trying to make something that's going to become a retail available product that is going to give you exposure to the private markets. Obviously, you're not going to have daily liquidity, but you didn't have it with BREIT either.
No, and it's also Vanguard cut rates. And if Blackstone had not made this change, people would sell. I mean, we bought it because we felt that there's not a lot of overlap anymore because of the things that Larry Fink has done. So Fink's being creative. That Aladdin
that's Blackstone, but we're also talking BlackRock.
BlackRock is, I thought they gave it away yesterday. It was down 60 points, and what they're doing is very positive, and they're not being hostage to what Vanguard's doing. And you're absolutely right. They're becoming more and more of a bank, and I think that stock is way undervalued versus everybody else.
Interesting,
frankly.
But I thought it was interesting that Rowan was actually referring to BlackRock in particular in terms of providing them product. Obviously, they can originate, but then a lot of people have been concerned about the growth of private credit, but the fact is that the buyer is one buyer. But when you start to actually disseminate that risk more broadly amongst the public in some way, then maybe you are raising sort of the risk profile.
You can get 7-8%. I asked Larry to be able to make it so that individuals could be in it. And that would position the company here to be able to say, can I be in that fixed income product? Because there's just so much money being made there. And Larry's doing a very good thing for people who want to invest. But right now it's institutions.
Yep, it's institutions. Exactly right.
Yeah, KKR's AUM's up 15.
Yeah, 15%.
I think sequentially, right?
15% year over year.
Year on year.
Yeah. There's a lot of alternative financials that are doing well. We have some tech doing well, but we have some tech doing badly. And I think that the tech is doing badly. Once again, it's NVIDIA, which is coming back. But we don't know what NVIDIA is going to report. There was a positive note about NVIDIA saying that we're troughing in terms of the negativity. I think you have to wait to see what the numbers are because the company's in quiet period.